According to supply managers in the 9 Mid-America states, how is the economy performing?
The regional economy, at least according to our survey, that's Creighton's survey of purchasing managers in manufacturing in 9 Mid-America states, the overall reading rose above growth neutral. That's the second time in the past 4 months. And this is for the month of January. It was 51.1. Of course, that is above 50. And that's up from December's reading of 48.7. But it's only slightly above growth neutral. So the manufacturing economy, at least in the region, and for that matter in the nation, is bumping along sort of below growth neutral and then a little bit above growth neutral. So it's much like what the Federal Reserve had to say last week. The economy is doing okay, but it's skimming like a stone skimming across the water. It goes below the water and above the water, below the water, above the water. That's the way the manufacturing economy in Mid-America is doing according to our survey. And we asked this time about tariffs, and almost 3/4 of the purchasing managers said any increase in tariffs, any tariffs would negatively affect their business via higher prices. So that came out also. And we also asked about AI, artificial intelligence, and about 4 of 10 said it would have no impact today, but a moderate impact. So that's good. So there's not a lot of excitement among purchasing managers about AI, but they are positive. Some, at least 2 of 10, said it would have a major impact, but that'll be down the road. So again, not much impacts there in terms of AI, but tariffs, they seem to think it'll have immediate impacts and not good ones, at least in terms of prices. And here I bring up the chart, which shows there in beautiful Creighton blue our index, and as you can see, it's slightly above growth neutral. And as you can also see, it's been the high for the year, at least over the last 18 months, I should say, is a lofty 52.5, and 50 is growth neutral, so not that good. As you can see, in red, the national number will come out later on this morning, and I expect it to be probably slightly above growth neutral as well.
What were the hiring trends?
Hiring, wow, it went up above growth neutral, and this is the first time in some time it's risen above growth neutral. We've had about almost a year of below growth neutral readings, and it rose to 51.1, and that's up from December's 46.4, and that's almost, I won't call it great news, it was good news compared to what we've been seeing. And when we look at manufacturing hiring across the nation's lost for 2024 about 93,000 jobs, and that's about 0.8%. The region that our Mid-America region lost about 7,900 jobs in the year 2024, and that's about 0.5%. And the underperformers, those are still Iowa, of course that's agriculture, and Kansas. Kansas is negative 0.7%, Iowa negative 3.6%, and in Minnesota negative 1.3%, Oklahoma negative 0.2%, and in South Dakota a big drop, again connected to agriculture and grains particularly, negative 6.2%. And the positive ones were Arkansas with 2.2% growth, Missouri with 0.5% growth, Nebraska with a much stronger 3.2%, and North Dakota with 0.7%. And we're still seeing, even with these not such good employment numbers, hiring, we're still seeing companies reporting difficulty finding and hiring workers, and that's going to continue. That's going to be even with AI, and maybe even especially with AI going forward.
What inflation trends are you noticing?
Inflation rose its ugly head there for the month. And this, of course, is at the wholesale level. It's called PPI, Producer Price Index. Our numbers rose to 62. Now, that's still in a moderate range, but the real concern is it's been rising for some time. And as I said, it's 62 for the month of January, and that's up from 57.1 in December. Jay Powell, head of the Federal Reserve, last week in the meeting said, hey, watch out for the year over year. And I'm like, no, Jay, I go for the 3-month annualized, and even that's quite a bit above the Fed's target. So the Fed's I think, is going to, I do think there's more inflationary pressures out there.
What is the economic outlook?
Keep an eye on the Federal Reserve's balance sheet. Jay Powell indicated they were going to continue to reduce and do what that's called is quantitative tightening, but that's putting upward pressure on long-term interest rates. The CPI, I think, will move higher in Q1 of 2025, and that's what we're in right now. Long-term rates, I expect them to move sideways to a bit up. I think the lower interest rates that we had several years ago, we're not going to revisit those. Now, there is obviously the probability of reducing interest rates. Something like an event like China invades Taiwan, that would bring interest rates down. But short of that, we're going to see a bit higher interest rates long term. Keep an eye on the bond market. The bond market tells more than any economist will ever tell you. The yield on the 10-year Treasury, it's been bumping up between 4.55% to 4.75, 4.8%. That's in an okay range, but just indicating inflationary pressures remain in the economy, and there's might say back in Georgia, more wood to chop there from the Federal Reserve's point of view, in my view. I think at least they should keep interest rates where they are. Keep an eye on the balance sheet. As I said, watch the ISM numbers. That's the same number we produce here for the Mid-America region. They produce it for the national economy. That'll be released later on this morning. And then the price of a barrel of oil, I think it's going to move lower, and that's good news on the inflation front. Oil prices went almost up to $80 a barrel not that long ago in December. It's moving below 70 in some cases. I think it'll continue to move lower, and especially with Justin Trudeau gone from being the Prime Minister of Canada, and that, in my view, that's good news. It's going to be good news on the energy front. Canada's going to once again take their place among the producers of energy. Keep an eye on the junk bond yield. That's the gap. That's the gap between the junk bonds up here and the U.S. Treasury, the 10-year Treasury. It's too small. In other words, investors are taking too many risks. That junk bond yield, watch out when it starts to rise. That's going to be an indicator. And watch the price of gold, of course. Central banks are buying gold. We're not buying much gold. You see all these ads on TV thinking everybody's buying gold. Not in the U.S. It's central banks, a lot of central bank buying, particularly China. Well, that's it for the month of January, here, the first business day of February. This is Ernie Goss with Creighton University, wishing you a great, great February, as we're now first business day of February. Until we meet again on the first business day of March, may your economic cup runneth over.